In the world of raw commercial land, what does highest and best use really mean for your bottom line? It's more crucial than you know.
I'm a graduate from University of Florida with a degree in building construction. So I started in the building industry for several years after college and then went into appraising pretty much after that. Ended up specializing in eminent domain appraisal work, which is more of a litigation high level valuation. Did that for many years and have had my own company. I am celebrating my 30th year this year. I've made it out there through all the thicks and thins of the market. So I've pretty much seen it all, but you never know until what's going to happen next year. So that's where I'm at. I'm a state certified general real estate appraiser, which you can appraise anything. I'm also a licensed real estate broker and a certified general contractor from my contracting days. I don't do any of that anymore, but I definitely use my appraisal and brokerage real estate skills. I also wanted to mention that I'm a special magistrate for the Value Adjustment Board, and I do this for 3 counties, for Pinellas, Pasco, and Hillsborough County. I've been doing that for over 23 years, and that gives me a great look at all different property types because I have to evaluate those for property tax appeals between the petitioner and the property appraiser, and then I make an evaluation and a recommendation to the Value Adjustment Board. So a lot of my knowledge comes from continuing my study of the market through this position as a special magistrate.
What trends are you seeing in Florida's property prices and demand right now?
I think what we're seeing here is a rebalancing this year as compared to previous years where we've had significant year-over-year increases. A lot of investors got used to that. Prices are definitely moderating is what I would call it. There's still some affordability issues with the interest rate being where it is, although it's still a fairly moderate rate. For homeowners, that becomes a problem, and then developers, have that same situation. We have Florida population growth that has slowed. One thing that I can say that there is a lot of resiliency, what I call resiliency, in the major large markets like Miami, Tampa, Jacksonville, Orlando. All of those seem to be doing fairly well because they're maintaining a fair level of population coming in. So looking forward to 2026, I think that we're hoping for a continued stability, potential increase, buyer activity. People are going to really start focusing on local markets and areas within those local markets as the hot areas.
A lot of people ask me, so do you think we're going to have a bubble? Next year, do you think that prices are going to tank and keep decreasing? I really don't think in our area it has been a matter of pricing decreasing. I just think it has been like stabilization, like you're saying, right? That we're not seeing those crazy increases that we had in prior years. And talking about that, could you discuss a little bit about price trends for the various property types? And for our listeners, there are 4 commercial property types, which are, residential, multifamily, commercial, and industrial.
Well, in the residential arena, and we're talking about land here, not actual end product, but they do influence each other. A lot of the public builders are demanding to have decreases in prices on some of their lot purchases, and also they want to match up their lot takedown because they have to take these down and then build them. They want it to match the actual sales that they're having per month. So that's somewhat of a change, whereas before they would take down multiple lots and then build them and then sell them. One of the things that, and now I'm talking more localized to Tampa Bay because that's my primary market area. Prices have dropped from like $50,000 per blank, which is a lot basically, to $35,000 per lot. And this is raw land I'm talking about. And similarly in multifamily, they were approaching and actually had a couple of sales at $50,000 per unit. Those are now down to about $35,000. So that's what we're seeing in residential.
So you have seen a price drop definitely in your area.
Yes, that's right.
And these are for residential. You mentioned residential, multifamily, and the same has happened for commercial and industrial?
Well, retail it was hurt quite a bit and was slow a couple of years ago, but it has come back strong. A lot of the major tenants have infilled, like big lots are being occupied by Trader Joe's and different ones. So actually retail is among the strongest market right now. There's industrial that had very high vacancies going into this year. year. It went from 3 or 4% to about 7% this year. They're starting to now infill those properties. So we're starting to see some industrial developers come back, but now they want key locations along the interstate, major locations with good access. And those are hard to find. There aren't a lot of properties that meet all those criteria. So that's kind of what we're seeing in our area of Tampa Bay.
And do you feel, talking about values, do you think that the appraised values are keeping the pace with the sale prices in today's Florida market? I find it so atypical to the rest of the United States.
For the most part, they are. And you keep in mind what an appraisal is. It's taking data from historical data, anywhere from a month to 1 year to 2 years, and bringing it forward to estimate the value as of today. So what's happened, a lot of the sales have now levelized for the last 6 to 12 months. And because of that levelization, the appraisals seem to be a little bit closer and not as many situations where you have the contract price above the appraised price. So I do see that. And also the property appraiser's office, which also tracks sales. Now they're a year behind because they do their evaluation as of January 1. They're also catching up to the trend there. So I would say it's getting closer. It's supposed to be, as of that date, it's supposed to be this whatever the value is, but just keep in mind, an appraised value does not necessarily equal market price or contract price. Those are two different things.
What is the biggest misconception that people have about property appraisals?
An appraisal is an opinion of value by one person. So depending on the different things that are considered, the scope, the assumptions, the data that you use, I could use separate data, have the same scope, and come up with a different conclusion than another appraiser, and we could both be right. Keep in mind, that is one fallacy, that people think that every appraisal, if you get two appraisals, are going to be exactly the same. They're really not. The appraiser doesn't really set the price. The market sets the price. And the market is the data that you select and the judgments that you make in adjusting that data. When you really look at it, you need to take that with a grain of salt. And if there's other information that can support the appraisal, I always tend to do that with my projects and giving the appraiser the data, because that helps a lot of times.
The terminology, which we have discussed before, and obviously it's so important when we talk about land. When we talk about highest and best use of a particular property to determine the value, what does highest and best use mean? People say, okay, so I always tell my landowners, we can help you determine what is the highest and best use.
In simple terms, the highest and best use is the use that results in the highest net return to the land. There's a lot of factors that go into highest and best use. There are basically 4 criteria that you look at in determining the highest and best use, and that is legally permissible, physically possible, financially feasible, and maximally productive, what produces that highest and best use from the other 3 criteria.
Would you mind unpacking for us the 4 components that you mentioned of highest and best use?
Yeah, sure. There are basically 4 tests that you would give, and they tend to be in this order. The first one is legally permissible. Legally permissible are things like zoning laws, building codes, environmental regulations, private restrictions, anything that will prohibit you or allow you to do a particular use. So that's a first test. If it doesn't pass, well, then that goes to the wayside, and now you have a group of things that are possible under legally permissible. You move on to the next test, which is physically possible. Now, I want to put a 30,000 square foot shopping center on a 10,000 square foot site. Well, that's not going to work, is it? And I know that's an exaggeration, but physically possible is the size, shape, topography, conditions, soil conditions, utilities that might be available. If you might have a great site, but if the utilities are 1,000, 2,000 feet away, it may not be feasible to bring those utilities there for the price that it would yield. So that's the next thing. So if it works legally, it works physically. You can put a 10,000 square foot building on a 40,000 square foot site with retention and all that. It looks good. Then you move on to financially feasible. There are many alternatives from that. Is it going to be commercial building? Is it going to be a strip center? Is it going to be a restaurant? All of these different things yield different results. You go through those, and for the most part, in an appraisal, you won't see a detailed analysis of that. You can do one, but it's generally under understood those different types of uses are going to yield. And so you narrowed it down to, I can put a 10,000 square foot building, like I said, on a 40,000 square foot lot, and it's best suited for a strip center with retail uses and certain parking ratios. Okay. Now, what is the maximum use of that property? Now you figure out the maximum use, and that's what returned to the land. Like if you had three alternatives, an office, a commercial, a strip center, or let's say an urgent care. Those are three alternatives, all could fit on the same site, but you have to look at the alternative that makes the highest net return to the land. Now that's figured out by going to your end value, less cost to get to the land value, and that is the highest net return to the land. That's basically how you can figure it out. You can rough it out and make sense of it. Some of it has to do with demand too. It may be best suited for urgent care, but is there a demand for that if there's one across the street? So that's kind of a breakdown, because ultimately the highest and best use provides really the strategic foundation of your appraisal and how you're going to value the property, what comparables you're going to use, all of those things. And so you start with this big funnel and you funnel it down. It's like a funnel. And what you end up with is the highest and best use of the property.
If there's a parcel of land, for example, that is zone industrial, but we have seen that there are multifamilies that have been built around it, and that there is the possibility of changing that zoning into multifamily in order to give it a higher value. Is that something that you take into consideration, or just because the zoning is not that at that moment, it is not taken into consideration?
Well, there's actually two things that you're taking into consideration when you're looking at zoning and the use of the property. In most areas, you have a zoning, but then you also have a land use. The land use plan is a future land use plan. That's usually what will dictate what use you can put on the property. Now, that doesn't mean it can't be changed. You can go and change that. It's much easier to change the zoning, which is a 3-month process, than to go through a 6 to 12-month process changing the land use. Oftentimes, the land use is what the county perceives and what they want to see. And there are different ways of going about it, but you do consider that. Sometimes there might be a hypothetical assignment that you might have that says, if it was changed, what would it be? And then you can tell which one would be a higher and better use, the highest net return to the land.
What happens when you do not have any comparables around the property that you're trying to value that have the same type of use? For example, I use Land Vision, IMAP, and other platforms, and I can't find anything around it in the same within the same zip code or subdivision or area or radius. What do you do in those instances?
Well, first thing to do is scratch your head and wonder what you do, because in an active market, you always have comparable sales, right? But when we have had non-active markets, like in 2008, you had sales that were either not arm's length because of foreclosures and things of that nature. So there are other techniques you can use to determine the value. First of all, you can expand your geographic area. If you can't find it in Broward, you might go to Palm Beach or to Dade, as an example.
Could you use other counties?
You can use other counties, but you also have to be aware of adjustments for the location of those counties, because real estate is location, location, location. A piece of property, 1 acre piece in downtown, might have a lot different value than a 1 acre piece in Weston area, as an example, out in Fort Lauderdale. That's what you have to look at. You can use those, but beware. Identify and look at what the surrounding properties are going for, and there may be a location adjustment for that. You also have older sales that you can use. Well, if you use older sales, now you have to have a market adjustment to bring those sales up to current market. Now, that may be an increase or could be a decrease. Let's say we have a down market and property values are trending downward. You might have to make a negative adjustment for those sales. And then there's other factors that might be more desirable. If you have a out parcel, if you have it at a signalized intersection, if you have utilities available, if you have site conditions that are different. You can use older sales. You can use sales outside of your area. That's generally what you would need to do. And of similar type, similar zoning, or at least use, it may not be the exact zoning, but you don't want to use something that has a more intensive zoning. And even though it's commercial, you want to use something that has a similar FAR, floor area ratio, as your comparable.
Since you mentioned, when property values come lower, what factors most surprise owners when their property values come in lower than expected?
Most owners are pretty proud of their property. and emotional about it. Even though I know residential tends to be more emotional about it, I can tell you I have had, and I'm sure you have had, some emotional buyers and sellers. So it's not exclusive to residential. When you really look at that, we're, as appraisers, giving a more objective opinion. I don't even tell them that this is Rick Harris's opinion. Okay, it's the market's opinion. All I do is take data and make sure that I adjust it properly, put it up against a mirror, and that's what the value is. It's pretty non-emotional for me. Now, there are certain things that can enhance properties, like maybe an adjoining property might enhance it, an assemblage might enhance it. There's certain things that you can look at that may not be straightforward, but ultimately it's an objective opinion. Also, a lot of people don't look at the sales that are in appraisals. If the sales are like, from Tampa and they're comparing it to Miami, unless it's a mall or some unique property and the way I always look at it, who is the buyer? Is the buyer the same person that would buy this property as your comparable? That's a good way to look at it. And if it is, then that might be a good comparable to use. There are all other factors that come into play, but those are some of the different ones.
And do you find commercial investors taking a look at an appraisal report, which they could be pretty lengthy? What do you recommend that they pay close attention to when they're reviewing those reports?
There's a couple things, and this sounds very simple, but honestly, look at the underlying facts. Maybe they have the wrong square footage of the house or of a commercial property. Maybe they have the wrong size of the property. Happens all the time. They don't understand the amount of wetlands that are on a property. Maybe there's less wetlands, which would impact the value because you're normally valuing on an upland basis. As simple as it sounds, check the math. I can't tell you how many appraisals I've looked at and they have a wrong calculation in there. It shouldn't happen, but it does. And so that's one of the things. Also, the key factors, assumptions and limiting conditions, and scope of appraisal. Those two set what the appraisal are, how you go about an appraisal, the definition of what value are you valuing. Is it investment value, market value, is a value for estate? Is it tax value? These are all different values. I had a great example where I was selling an investment, was an absolute net rent. The appraiser was appraising market value. Well, I sold it for more than $1 million than his appraisal because it was an investment value. It was with a group of doctors, an absolute rent. The building was a class B, C at best. He was valuing the market value. So, be aware of those kind of things. And then also the quality and relevance of the comparables. Are they really comparable? Sometimes owners know more about their property and about the surrounding comparables and what sold where than the appraiser does. A lot of appraisers, I'm sure you've seen it.
Human error. And like you said, it's all a matter of we need to pay attention to all the details and check the data and the math. Never paid attention to that. We'll definitely have to pay attention to that.
Just 0.25% on a cap rate can make a difference, right? And the other thing, check their qualifications. Also, the consistency within the appraisal. A lot of appraisers are coming in from out of town. They're from, New York, coming down and evaluating a property here. They come in for a day, gather their data, try to get stuff from all the brokers and appraisers, then go back home and try to write it up. And we're going to see quite a change. We haven't talked about it, but the AI, and it's probably a whole nother subject, and what's going to happen with appraisals and the data is going to be interesting to see.
Something to pay attention here, especially in Florida with flood, the storms, the hurricanes, the weather. What are some environmental risks that influence property values in Florida? At least the most important that come to mind.
We had 2 hurricanes recently here, back to back within 2 weeks, and it was devastating. So you have temporary situations like that, and then you have flooding that occurs routinely, which are floodplains and things of that nature. But some of the things to be concerned with when and more and more people have been asking me, like, we have an apartment building that we're selling. Is it in a flood zone? Because this flood insurance now has gotten really expensive. And so flood insurance premiums is a cost and these are cost items, any repair and mitigation expenses that you might have to do. If you're in a flood plain, you have to raise that land higher than the floodplain to even start. So fill can be tremendous amount on a 100-acre parcel for a subdivision. And then the other considerations are things like, renovation limitations. I mean, you have FEMA that if a house is wiped out by either a coastal erosion erosion or a flood or things of that nature, they only allow you to improve it up to 50% of the depreciated value. Well, unless you get your own appraisal and know what you're doing, they use the appraised value from the county, which can be very low. So your threshold to improve that might be lower. So you need to get an appraiser to really take a close look at that and make sure, because otherwise then you're not going to be able to improve that property.
I mean, I've seen projects that they just don't pencil and don't because of the amount of fill that you have to bring up in order to be able to develop that lot, which is absurd. I mean, we're talking sometimes in some projects that I've looked at, but you're talking about millions of dollars that could make or break so that's super important. Absolutely.
And I'll add one other thing, all of these factors create risk, right? Risk are, determined by buyers, and they're taking closer and closer look at this. Now, one thing I can say about the flood, people love waterfront, and they're always going to buy waterfront regardless of the risk. There are cautions there, and people are becoming more and more aware of what the potential risks are for that. For example, there are studies that have been done in Miami that show that the vulnerable areas that are subject to flooding sell for less. The properties sell for less. The market does recognize that, and they're becoming more aware of it.
Can you think of one unique example of something that was out of this world through your career that you could share with us during an appraisal?
But one sticks out in particular. We were doing appraisals for multiple parcels for a pipeline project through the middle of, I believe it was Polk County was my section. Each of us had a section, and it was the pipeline that went from the jet port from the port of Tampa to the jet port over in Orlando. So it covered all of those areas, and we were working for the pipeline project. Well, we had to inspect every one of these properties, and so we had maps. We went out there, found the properties, and most of them were along where the power lines were. But in most of these properties, there were cattle and different herds of cows and whatnot. And so I'm out there with the younger associate. I'm the senior associate out there, I'm taking the pictures because I always like to take my own pictures. I'm pretty particular about that. And so I'm taking the pictures, and I hear something, and my associate says, Rick, and I look over, and there's this big bull just turned around, giving snorts and stuff. And I'm looking at him. I'm looking at the fence, where can I go? Luckily, I was between him and the fence, so I didn't have to go through him. So he starts a little bit of a gallop here, and I'm thinking, man, I better get going. He's not slowing down. So I'm running to the fence. I just get over it, and the barbed wire there catches my shirt like this, and I rip it. And then he comes right up to there and gives me a couple more snorts, and then just goes back to his herd. So I guess he was protecting his herd. That's a real life story.
Well, Rick, we really want to thank you for your time today. I've always respected you, as a broker, as an appraiser. Imagine 30 plus years of experience and being a GC. It's amazing knowledge. And we thank you for being here with us today. We really appreciate you.
We are great friends through our association with the CCIM. I'm president of the West Coast, and Monica is my counterpart as president of Broward. So we have a great time, and I'm glad to have known you, and I hope to continue doing business with you.